talk about what's working in the markets and what might be worth consideration going forward. Brenda O'Connor Juanas is a senior vice president and financial advisor at UBS and one of our regular contributors here on The Open. Great to see you, Brenda. What do you make of the latest round of, well, let's go to the Jay Powell comments, the Fed speak, so to speak.
Right. And you know what, John, I wouldn't focus so much on what he said this week, but what he said on November 1st. And look, we had the best week of the year last week, up 6%. The irony here is that a handful of days before that, we were in correction territory. And so the performance here was due to those dovish comments on the 1st, as well as that October payrolls number. Of course, the headline came in below expectation, but more importantly was that wage growth number, which was the smallest gain since 2021. John, we have 7 more weeks of the year here, trading weeks of the year, which is wild to me. So the question I guess you and I have to talk about is where do we go from here? UBS does think that markets could gradually grind higher from here on the basis of, you know, some of the Fed coming close to winding down. And also we think that earnings could reaccelerate into 2024. I want to make one other point here on equities. That October sell-off that we saw was in large part due to rapidly rising rates. We now think the majority of that rate volatility is behind us, which is why we think this is going to be supportive for equity markets.
I guess one of the other things that people talk about, Brenda, that's helpful context, by the way, thank you, is where the economy lands. People pull out all these historical charts when they're trying to assess where we are in a cycle, and they'll often note that when you come to the end of a rate hike period, and we're so as we just outlined, we're still trying to assess if we are at that point, but it's as we move towards a period where maybe you start to see a pivot of sorts on rates. Where's the economy? You know, is it this so-called soft landing everybody's talking about? Do you end up in a recession? History would suggest that the stock market performance can differ depending on where the ultimate sort of economic state lands.
Right. So again, with Powell's comments, remember, he has to keep that optionality open. He cannot signal to the market that we are totally out of the woods in case we have a resurgence of inflation, in case financial conditions get too loose. So I'm more interested in what the data is telling us versus what his commentary is. On what we think stocks will do, well, look, our preference is still for fixed income over equities at this point. We think growth is slowing. We do not think that we're going to tip into a recession next year. But overall in the broad market, we think that, you know, for example, the S&P could be at 4,500 by next June. UBS thinks 4,700 by the end of 2024. And the important thing here is to look at which sectors will be beneficiaries of outperformance. Well,
let's talk a little bit about that. I mean, this has been the year of big tech. You know, what are the kinds of areas that you're looking at very closely right now?
So, John, you mentioned something earlier. We are in the late stage part of the cycle. So UBS is more interested in sectors that will benefit from that late stage part of the cycle. So things like consumer staples, which will be defensive, could potentially and are also down year to date. So they have scope for catch up. We also like industrials. Now, look, industrials is a huge swath of different companies, but we think that they're going to benefit from secular growth in things like defense, in things like onshoring or reshoring of supply chains, and in terms of infrastructure spending. You know, so for example, we're looking at companies that are leveraged to the U.S. CHIPS Act. There are ways and areas that we can be proactive here, even if markets still seem a little bit uncertain.
Now, I look at the Canadian market by comparison. Industrials, it's a pretty large group for the Canadian stock market. It's about 13%. But I think a lot of our audience knows that the performance of commodities, what happens with oil, for example, what happens with the materials complex, those two groups, coupled with banks, make up the lion's share of a market like Canada. When you think about the commodities outlook from here, what do you think? Let's start with oil, which has had this wild move in recent weeks.
Absolutely. We'll start with oil. I'll make a few comments on gold as well, but let me talk about this in the context of the Israel-Hamas war. Now, look, there is a contained conflict right now. Our base case is that the impact will be limited to the local markets. But look, we're all watching this story very closely. It is a very fluid situation, and there's a huge tail risk if some of these regional players step in. We also know, as you said, WTI has really struggled these last 2 months. A lot of this has to do with the U.S. consumption numbers that came out that were quite weak. Our view is frankly still positive on oil for a whole number of reasons that you and I have talked about that we still think hold true. And look, if Iran supplies are interrupted here, we could see WTI well above $100. Our core view here is still $90 to $100 on the commodity.
We'll see what happens on the oil front. On something like gold, which has also been fascinating to watch, just not just because of the central bank stuff, but obviously what's been happening with the geopolitical jitters as well.
Right. And here, I'm getting so many questions from clients right now about should we be buying gold? And here's what I'm telling them, John. From a fundamental perspective, gold is not particularly attractive. Why? Because you have a strong U.S. dollar, you have high rates. And we know that gold historically moves inversely to these things. The thing is that gold isn't really trading on fundamentals right now. There's a lot of behavioral factors that are driving this pricing. And investors are looking to add gold as a geopolitical hedge. So here's what I'm talking to clients about. If you are putting this in your portfolio for a tail risk hedge, it has a role there. Just try to get your entry point right. We're at 1950, as you talked about in the opening comments. I think anything kind of 1900 and below could be a decent entry point.
Brenda, it's